Good morning, guys. We are absolutely flying out of the blocks this morning in true Olympic style. It's only 9:30 in the morning here in the UK, but today is a big PMI day, so there's a lot of data coming out. And we've already seen the figures this morning from Europe. The Eurozone PMI was flying as well, with business activity soaring at the fastest pace in 21 years. Obviously, because of the euro area continuing to reopen following the pandemic restrictions. But the report also showed that prices charged, which feeds into inflation, also shot up at a pace never seen before. So as average prices are surging, this is likely to feed into consumer prices in the upcoming months, and surging inflation is something the ECB will be keeping a very close eye on. In yesterday's ECB meeting, they said that they were continuing with loose monetary policy, and this one data release is unlikely to change that. But a report that was released following the meeting did show that there were divisions within the ECB among some of the more hawkish policymakers. It was to be expected, but there was quite a strong reaction in the euro, which I'll show you in a second. But one of those was the president of Germany's Bundesbank, who said that the new conditions, which allows inflation to overshoot the target, are too aggressive and could risk inflation surging, which today's PMI release could be hinting towards a little bit. So the main reasons for input prices continuing to climb are the supply chain problems. Data in the PMI showed that once again supplier delivery times expanded at the quickest rate ever recorded. Supply chain problems were one of the big risks to the recovery that the ECB pointed out yesterday, so it's obviously something to keep an eye on, along with the spreading Delta variant, which is weighing on the outlook for business confidence. But in the markets, you know what, despite yesterday's meeting and this morning's data release, we're still sort of holding up here on this higher low. This situation that I talked about yesterday, where we have this swing low that has been coming off from lows, and we had that type 2 close on the trend line last week. So we could still be looking at this being a platform for the price. And if we look at the hourly chart that we were looking at yesterday, I haven't changed anything since then, just to keep things exactly the same. You can see that we were struggling around this lower high yesterday at the time of the video. Then the report was released, we had that huge drop, but it's still sort of stalled at this platform for the price that I was pointing out. We've then sort of risen above and we're testing that trend line now. I'd expect there's probably a good chance we'd break through. If we do, we could be looking for a retest from the other side, trying to build that bullish structure again. If we fail to and we break through this swing low, as long as there's time left before the end of the week, we could be looking for trades from that trend line if it made it there, since even though it would still be bearish structure, it will be in line with the sort of the lower lows and hitting a path of resistance there. But really over the medium term, it still needs to break this bearish structure. We still failed at that previous high, so that's a lower high. And although these are in line, it's still overall looking quite bearish, but I'm feeling quite bullish about it. So I'm looking for that break of the trend line stay where it's testing at the moment. Hopefully it doesn't fail there, which it's doing as we speak. But otherwise, that's all for now. So if you're one of our members, I'll be switching over to do the morning markets now, and I'll see you also for the community hour at 1 p.m. UK time. If you're not a member, have a great trading day, and I'll see you later. Hit the like button if you like this one. Take care. See you soon.